in the bank.
All right. Hello, podcast world. I'm Angela. This is the podcast Money in the Bank. My co-host is...
Today, Brett.
well, not just today, but going forward. He'll be my co-host for a bit here. So today we're going to talk about student loans. So did you have any loans?
I did. So I didn't necessarily need to take out student loans when I was in college. I actually had a business when I was in college that I started when I was 16 with a couple other of my friends. And so we had accrued enough money that, and scholarships and things that we didn't necessarily need to pay for it. We had enough money to pay out of pocket. But, at the time, the colleges were pushing, like FAFSA loans and any other kinds of, loans at the time where you could get 0% interest on these, government funded loans. And so that was something that I looked into, I think my junior year of college, and said, hey, if you're just going to give me this money and I don't need to pay anything on it and I'm not accruing any interest until I graduate, I'm just going to take the money for free, put it in the bank, gain interest on it, and then I'll just return it before I graduate and have to pay anything on it.
Yeah, and that's probably back when interest rates in banks were actually high enough. Now you're lucky to get 1%, but you could have probably done like a 2-year CD at that point and gotten 4%. So, there was money to be made there, I guess.
Oh, yeah, and especially because I was doing it for a couple of years. It's not like I was just like trying to grab the money and run, basically, and then, turn it back later a month, gain $20. But
right.
This was some significant money. I got to gain a couple $100 there with the loans I took out.
So did you actually qualify for the 0% loan?
So that's what I thought, because I only had, so my parents had to claim me as a dependent, but only my dad was working at the time. So I did qualify for the loans in general, but as a college student, they weren't like very aggressive in telling us what the different types of loans were. They had some like basic courses and stuff, not even classes, just like a lessons learned when you get to college for like an hour session or something. And so I that's all I knew. It was either, can I do the 0% finance loan or can I not do it? Right. So that was my only option. So I was like, yeah, I'm just going to go for it. That's the only thing I need to sign up for. I didn't have a lot to select from, even when I was going through the federal process to fill out the forms and things. And so then, I got to the end of my senior year, and it turned out it wasn't a 0% loan. And I did owe money on that loan that had been accruing since I started it. And I was very upset about that.
Yeah. And I think that's common because it is really hard for people to kind of go into college and they've never had to take out a loan before in their life. And there's all these different terms and different, language that they're not fully understanding and nobody's really explaining it to them. And you get yourself stuck in a situation like that where you think you're getting something that you're not.
Right. Yeah. So instead of, accruing interest and taking money away from that expedition, I got like a bill at the end of the year that was like, okay, you owe this back, what I was expecting, plus you owe like several $100s on top of it.
Yeah. Well, and student loans, federal ones, at least mine, were at 6.8%. And I took mine out in 2008 and 2009. So, yeah, 6.8%. I mean, that's higher than my house interest loan. That's higher than a car interest loan. So it's really high, and it's such a large loan. People take out $30,000 a year.
Yeah, I was lucky because I only took out like a couple thousand just, to do whatever I needed to do with it, which was basically put it in the bank because I was working at the time, and so I didn't really need the money, and I was graduating. So yeah, I got lucky. I was, damage could have been much worse.
Yeah. So outside of that, you paid for college yourself.
Yep. So that was not a problem for me. They basically had us go to that college because we were running the business. They gave us a lot of scholarships to continue running our business and continue going there. So we had our company that we were running. I also worked another co-op job while I was in college for 4 years. So I had multiple streams of income during that time. Plus all that, that birthday money that I would be saving away and stuff. And anytime I could scrounge around anything, it would go toward paying off debt because I'm very averse to having like any debt in my life. So
I would say that's very different than most kids. Most kids go to college and they get overwhelmed and feel like they can't work, a second job, let alone a job and own their own and run their own business. So that's kind of a unique user study there.
Oh, absolutely. And a lot of my very close friends in college, still today have debt that they've been paying off for almost 10 years now or close to. And they graduated with some of them $100,000 in debt, and not necessarily because they needed to, but they did study abroads, and they did trips, and paid for their housing and room and board and food, but mostly partying. I mean, that's a very common thing that happens, is you pay for your lifestyle in college, not just your necessities.
Yeah, and I saw a very similar thing where people would take out extra every semester to take a trip, spring break, or party, or cover more living expenses. And it was one time I got in an argument with somebody who said, no, you can't do that. They cap what you take out. And I just laughed at them, because I know for me, so I graduated with student loans, and freshman year, I got my loan amount, and all of a sudden I got a refund check in my mailbox at school for $1,000 to go towards books and other expenses. And, so basically I was getting $1,000 extra a semester that I didn't need to take out. I saved for my books. But, a lot of people would take that $1,000 and use it for whatever they wanted to. So I think it's really important to make sure you're not taking out more than you need, and really watch all of the terms of your loan. How much it's for, what your interest rate is, how long it's for, if interest is deferred until you graduate. Those are all really important things to see in your contract.
Oh, absolutely. And, there's so many different sources of income available. Like, I guess in the time we were going to college, the abuse of the bridge card was just becoming popular. So basically everyone that was a college student could apply, somewhat based on income level. Because college students almost have no income, they could apply for this bridge card, which is basically food stamps, right? And you could go to the grocery store, but you could spend it on like Red Bull. So kids were going to these grocery stores and just buying like 30 cases of Red Bull for nothing on food stamps. Or they could buy groceries with it, right? But,
yeah, well, and I had a lot of friends doing that, and they would get $200 a month. And so even if you're not buying Red Bull, it's like, okay, I'll bring, all the snacks to the party. I'll get all the chasers. Because I think there were restrictions around buying alcohol with it. But, if you're the one bringing all the snacks and the chasers, then you might get your alcohol for free from somebody else anyways. So I think there was enormous abuse there.
Oh, yeah, or just buying stuff in general and just trading for it, right?
Yeah.
Just trading somebody for cash, and then that's a quick way to, cheat the system.
Yeah.
And I think they've gotten a lot better about, reining in the abuse of that program, and I think they've shut down a lot of it. And I don't think many college students can get it anymore, which is a disadvantage for a lot of people, because some people still actually need it, and the program was there for a reason, but it was just completely destroyed by rampant abuse once people figured out that they could get away with that.
Exactly. Yeah. So I think we've covered some really good stuff here about, kind of watching your spending in college and, taking out what you need. But I also wanted to talk about, all right, it's too late. You've done the damage. You have the loans. Now what? So I actually graduated with $18,000 in student loan debt. So basically my tuition, I went to school out of state, which, everyone here is out of state and they think, oh my gosh, so much more expensive. But luckily for me, I actually qualified for in-state tuition at that college with my grades. And I had other scholarships to really help reduce tuition. And also, I was really lucky because my dad paid my tuition for 4 years, and I was in charge of my room and board for 4 years. So, I lived on campus the first 2 years, and it was really expensive to live on campus, especially because I got to live in a brand new dorm my sophomore year. So they really charged us, surplus for that one. And so it was, it was like $8,000 a year to live on campus, and they kept giving those $1,000 checks every semester, and I actually just gave those back to my dad, thinking like, oh, it's all going to the same place, like he's covering tuition, so I'll give him this check, not realizing I should have been applying it back to the loans I took out that were in my name. And so, fast forward, and even though, I thought I was taking out $16,000 with interest and those extra payments and stuff, it was $18,000 when I graduated. And I just remember, like, kind of being in shock even at that number, which isn't even as large as some people have it. But I was like, man, that's like, I could have a car for that. I could have a down payment on a house for that. And well, I live in a low cost of living state, so I could have a down payment for a house with that, but that's not always true. And I decided in that moment that I wasn't going to keep that debt. And so I decided it would be paid off within a year of graduating. So right after college, I actually moved to Chicago, which is not a very low cost of living place. But I did it. I just really kind of focused in on that goal. And I think it's important to share with people, like I wasn't a hermit for a year. I went out and I had fun and I did stuff, and I really enjoyed, the time I got to live in Chicago. I had a great time. I went out with coworkers, I went out to happy hours, but it was just kind of being mindful of my purchases. And, when I went grocery shopping, I would walk an extra quarter of a mile to a cheaper grocery store because they had chicken for $2.99 a pound instead of the store by me had it for $8.99 a pound. So I think kind of just being mindful of those areas really made a large difference in the end.
Yeah, so do you have any idea, can you tell more about what that picture looked like? So you said you graduated with $18,000 in debt, right? Which is probably a lot lower than, a lot of people do today. Certainly because it's so easy, as you mentioned, to just accrue that over time. Year over year, right? It's small increments, and they're just like, okay, yeah, I'll take a little bit more out this year and a little bit this year, and then by the time you graduate, you have some pretty significant numbers that you're throwing up there. The price of a brand new car, or the down payment on a house for probably a lot of people. So with that number that you have, looking at you in the face every day, a lot of people I think are ignoring it, but you decided to go the other way and say, I'm going to deal with this problem immediately so it's not looming over me, anymore. So how did you approach that task of getting rid of that? Like what was going through your head there?
Yeah. So, for me, when I looked at that number, I was like, the longer I keep this, the more it's going to set me back in life. And I'm 21. I was 21 when I graduated. I was like, if I'm out of debt in my early 20s, I still have so much time to save up for a down payment on a house and all that stuff. So what I did when I graduated, I had about $5,000 in the bank. And I had to move from Muncie, Indiana, and then I was back in Lansing, Michigan for a month, and then to Chicago. So I lived with my dad for that month gap so that I could save, not move to Chicago early. My job was starting in June. And so kind of during that month, I laid a groundwork, and I was like, what is it going to take of me to pay this off? How much can I rent an apartment for in Chicago? And so before I even made any of those big decisions, I planned out a budget, and I said, okay, I want to get this paid off a year, which means I need to be able to throw $1,000 at this a month on top of the $5,000 I already have saved up, and then it'll be gone. And so knowing what I was going to make, and, I'll just put all the numbers out there so people can understand. Like, it's not like I started making $100,000. I was making $55,000 that year, which is very good, but there are a lot of people who make that money, and it's very easy to spend it too,
Absolutely.
And so I was making $55,000 gross that year. And so I started my job, and I prioritized saving in my 401k. So I know Dave Ramsey kind of says, you can put some of that stuff on hold while you're paying off debt. But for me, and the power of compound interest, I knew I had to start saving in my 401k. So I put 10% of my check in my 401k. My rent was about $1,000 a month. And then I earmarked $1,000 going to my student loans. And then on top of that, luckily I lived in Chicago, so I didn't have to have a car or a car payment or insurance or any of that. So my only transportation cost was my CTA card, which was $86 a month. And then I usually spent about $200 on groceries a month and $200 going out to restaurants or going out to grab drinks with coworkers. And outside of that, I actually did buy. So when I was going to get my apartment, I needed furniture. I had nothing. I was moving nothing up with me. and I kept that to $600. So I went to a store called Affordable Portables, and I bought probably the world's cheapest couch, but it was new and it was mine, and that's like all I cared about, you know. And so I had that, and then I did buy some new clothes for work because I was moving into a professional setting, and I think that year I spent about $500 on clothes, just kind of building up my professional wardrobe. But outside of that, you know, I really just focused on other costs where I could. And living in Chicago was great because there were free festivals on the weekends that I could go to. So I still had a lot of fun without having to spend hundreds of dollars on entertainment a month.
Right, because it's so easy to, you know, look at a financial situation and say, like, I'm gonna lock down and I'm gonna save everything I can, or have everybody tell you, you know, you can't go out and have fun because you need to be saving to pay off some of this debt. But that's, you know, there's an easy balance there, and it's kind of like weight loss, where, you know, if you try and, you know, cut everything out and, you know, follow a regimented diet where you're not enjoying it and you're ruining your life doing this, yeah, maybe you'll see those results a little bit faster, but you'll never stick to it, and it's going to come back again. So people that are successful with paying off debt are the ones that are, you know, continue to live their life and just trim things out that were unnecessary, and they weren't even realizing what they were doing in the first place. So if you can get past that mental block and just cut out some of those things, right? Like you said, you're going out with your coworkers, you're having fun at the festivals, you become more savvy about the things that you are doing, and you're not blindly just grabbing the Starbucks every day because, you know, and that's the common example everybody talks about, is if you cut out the cup of, you know, the $3 cup of coffee every day, you know, that adds up so fast to, you know, being a couple $1,000s a year that you can, or, you know, about $1,000 a year that you can save right off the bat. But you don't have to cut out coffee completely, right? Like you probably were still drinking coffee, going out with coworkers.
Yeah, and so, you know, living in Chicago, Intelligentsia coffee is the best thing in the entire world. But it was, I made it more of a treat. So I didn't get Intelligentsia every day. And when I went there, you know, they make it for you, and it's pour over, and it's really luxury coffee experience. And I would sit there for hours and actually study and enjoy that cup of coffee, and really made it worth my time because I got free Wi-Fi. So, you know, it was worth that $4 for a coffee. But, you know, another thing I think is really important is you should pay yourself first. So every week when I got my check, I was like, this is how much, you know, I need to set aside for rent, and this is how much goes towards my student loans. And I just did it pretty much immediately, because once it was out of my account, I wasn't going to take out credit card debt to fund a coffee habit. And so then I just lived on what I had left. And once you get used to doing that, it's very easy, because you're not artificially inflating your lifestyle and then trying to save on the back end. You know, I think where it gets really dangerous is when people are like, oh, whatever I have left over at the end of the month, I'll put towards my loans. Well, then it's so easy to be like, oh, look, I have a balance of $1,000 in my account. So yeah, when somebody asks if I want to go to this concert, I can just say yes. So if you don't have the money, it's easier to say no.
Right. Yeah. Direct deposit is an extremely powerful tool, right? Because the out of sight, out of mind mentality, again, you're tricking yourself into believing that, you know, you just are living off less money than you really are, you know, have, or that you're making on a monthly basis. But it's, you know, that money is earmarked and is for a purpose. So get it out of the way early and then live off the remainder. And then it becomes your lifestyle to do that. Not, you know, don't take advantage of that extra money for a couple months and get used to it. And then you really feel the pain later if you try and take it away.
Yeah. Well, and I think it's also really important to understand that, like, obstacles might happen. So something else that happened while I was on my debt payoff journey is I had a large mass growing that was found to be non-cancerous, but it was a mass of cells growing very quickly that I needed to have removed. And I was on a high deductible plan right out of college. So it was all out of pocket. That cost me about $2,500 at the end of the day. And, you know, instead of fretting about it or being worried like I might miss my goal, I kind of just kept chugging along. And if I had extra money one month and I spent, you know, a little bit less on groceries, I'd put it towards my loans to take that from, you know, $1,000 that month to $1,200. But I just tried not to get upset about it, and I understand things happen. And it would have been nice if I didn't have that medical situation. I could have paid off my loans 2 months earlier. But at the end of the day, once you have those habits in place, even if you have something that sets you back a few months, it's not going to derail you for 10 years. Like my loans should, in theory, I should still be paying on my loans right now, which is so crazy to me because they've been paid off for 4 years.
Oh, right. And you've done so much probably with the rest of your money in that 4-year time frame.
Well, and I think something else that was really empowering for me is, I ended up coming up with $13,000 in 1 year to pay off my loans. And then that was just ingrained in me. It was very easy for me to save $13,000 at that point because my lifestyle was set. I was happy. I lived on a certain amount of money, but I had a great, I have a great life and I'm very happy with that level. And so once you can save $13,000 a year, now 4 years later, I did get that new car and I had a down payment for a house.
Oh yeah, absolutely. So you've really persevered over, some pitfalls in there. It wasn't just smooth sailing. It's not like you just, locked yourself in your apartment and, saved the money as it came in. You were having fun. You had problems that came up along the way, but you were still, relatively easily able to do this because 1 year is a really aggressive timeline to pay off, close to $20,000 in debt. So congratulations to you. I mean, that's something to be, proud of. And I think, if a lot of people are, doing some of those things, not necessarily everything there, you're going to be way ahead because like you said, paying off the regular rate of the loans that they give you. And this is especially true of the college loans, let alone mortgages nowadays. They want you to pay this stuff as long as possible because they're making as much money as they can off of you taking your time getting this money paid back.
Well, and I think that's another really important thing to look at. I saved thousands and thousands of dollars in interest that instead of going, to a corporation or to, the government or wherever it was going, I got to keep it. And it goes in my pocket and I can invest those thousands of dollars now and I get the compound interest on it, which I think once you start letting compound interest work for you instead of against you, you've really got a good thing going on.
Oh yeah. And I've got a friend of mine that uses a terminology that every time he has a problem in his life, that's going to be a situation or a problem for future Aaron or future Brett. But you're doing the opposite of that. You're providing, benefits to yourself in the future. You're saying this is going to be great for future Angela.
Yeah, and I think, that's how I've tried to structure my life is I'm young now. I'm in my 20s. I don't have kids yet. And I know that it never gets easier to afford things. Life never gets easier. Things never get cheaper. So if you can adjust your level of spending to a place where you can afford it, look at your salary, set a budget, and start cutting out things. When I was so back then, I did go shopping more. I bought a lot more clothes. And slowly over the years, I've really honed that in. And I'm not any less happy. In fact, I'm probably more happy because I don't have as much clutter everywhere. And it's just kind of the sense of freeing. Like when I go into my closet, I like everything in there now instead of having all this junk that I never wear. I used to be really bad about buying heels all the time that I would never wear because they were so uncomfortable. So once I started just buying, I just stopped buying things that I don't care about. You actually become happier. And that's not to say I'm this, frugal minimalist person that never buys anything, but I think it's really important to kind of evaluate your life and see what makes you happy. And, another big thing is once you start paying down that debt that you have, you realize it does make you happy to see that number decrease and to think about all the money that you're saving over time. So for me, every time I logged in and I, got to send another $1,000 to it, that truly made me happier than buying a coffee every day.
Right, because they, a lot of people probably just think of it as the way of life. Right, I'm just gonna always have this like big number attached to me, whether it's student loan debt or it's a mortgage. Right, that's just the way it is, and that's what everybody does. Right, but that's not. that's probably what happens to a lot of people, but it's not what needs to happen to a lot of savvy people, right?
Well, and I think it's not what needs to happen, especially to people who make over the median income. I see a lot of college grads get out and they're making decent money, but they jump into this overinflated lifestyle. And I think another really important thing when you're looking at a balance, it's very easy to get overwhelmed and think, well, gosh, I can never pay off $50,000. That's so much money. And so people kind of block it out because they don't think they can do it. So they just do the minimum payments and they try to forget about it. But that number is not going away. And especially now with the student loan forgiveness kind of being up in the air more a little bit, it's really important to take ownership of that. And I think it's also important to run the scenarios and see how much you can save by paying it off early. And, instead of focusing on the $50,000, break it up into $5,000 increments if you need to, and make, little charts or something motivational for you, and check off your progress as you go. Because if you're like, $50,000 and I'm going to pay off $5,000 of principal each year, you'll still get it paid off in 10 years, which is still good. And if you can break it up that way in your head and stick to a plan, I think that's the most important thing.
Right. And once you get started with that, and once you get aligned with it, I think it's surprising how much extra money you kind of find that you have sometimes that you weren't expecting to have. And then it feels so good to just, put a little bit more toward that goal and getting yourself ahead. Be like, well, I can do this in 10 years, but if I just suddenly realize I can do this in 9 years if I just, put like a little bit more toward it. Right?
Absolutely.
That avalanche like really helps people out. So it's a double-edged sword kind of.
Absolutely. And I think just kind of taking a hard look at, I've talked to some people about budgeting, and their big example is, but I love going out on the weekends. Well, you can still go out, but instead of, going and spending $100 on your bar tab, get a drink there. That's what I used to do with my coworkers. I would go out and I would still hang out and have fun with them, but I would get 1 to 2 drinks and then switch to water. And or invite people over and, split a 6-pack. That's a lot cheaper. So find ways to enjoy life and do the things you want to do, but it doesn't always mean that you have to spend an insane amount of money doing it.
Right, and it's a peer group as well, right? So there's a lot of people that I graduated with that have continued kind of that college mentality, and it's difficult to get out of that rhythm of habit to go out every weekend and spend. Those bars cost a lot of money when you go out and you're not getting like a nice cocktail or something, and you're just drinking to have fun for the evening. Even at a cheap kind of bar, you could spend $50 a night, like on the regular basis, close to $100 if you're somewhere that's, like in Chicago, easily you can spend $100 a night just being out for like 4 or 5 hours. But if your peer group is doing that, and that's what they do every night, maybe that's not the thing that you want to continue doing, and maybe you want to suggest some different alternatives or different items. But what I've seen a lot of times is people kind of drift away from that mentality, and if certain people can't get away from that and that's all they want to do forever, it becomes kind of like a toxic environment for you to be a part of, and you may want to ask, is that the right thing for me to keep doing, or should I be looking to do something else? And it's difficult, but maybe just say, hey, I'm going to take a pass tonight.
Absolutely. And I think surrounding yourself with like-minded people is very important on a journey of paying off debt. So, especially if you're dating somebody or with somebody, if they have a similar mindset, it becomes insanely easy because you're kind of in each other's corner, rooting each other on, and you have that accountability. I kind of think of it as when you're working out, and if you have a workout buddy and they're texting you, they're like, oh, well, how have your workouts been this week? Well, that's so much easier to stay on track because you're being held accountable. And the same is true if you kind of have, and I don't think you need to advertise it like, oh, I'm paying down my debt to everybody, but if you have a select group of people and then they're like, oh yeah, so, you said you were going to pay off your loans in a year and it's been 6 months, like, are you on track or not? It can be really, really helpful to hold you accountable and keep you going in the right direction.
Right. And I mean, it's that was a great analogy because if you skip leg day every day for 5 years, or you just do the minimums, right, and you don't ever, try to max out, or you can try and grow your reps, uh, you don't make as much progress, but it's it's visible to the people around you to say, like, yeah, you're not really achieving your goal like you were expecting to. You don't have ripped legs, or you don't have a ripped bicep, and you're not in great shape. But with that, it's like a secret, right? People keep that close to their chest. They don't tell anybody what kind of how much debt they have, or how much financial irresponsibility they have, or anything like that. So
Well, and just in general, when I paid off my debt, I was so excited, but it's one of those things that you don't really feel like you can share with everybody, because you're not going to put it on Facebook like you put other things on there. And if you do, you kind of get mixed reactions. And some people are like, oh, well, I wish I could pay mine off. And there's a sense of jealousy. And it's like, well, I worked really hard on this anyways. You could too. You can pay this off too. We can do this together. We can, what a great world it would be if we were all paying off our student loans super fast. But, then on the flip side, when I bought a new car and I posted it, it was like, oh my gosh, congratulations. And so we kind of live in this society where making these big purchases is really celebrated, but getting to the other side and having these purchases paid off or having debt paid down isn't quite as celebrated. So part of that, I think you just have to find a good group of people that you can kind of share these milestones with, that are really happy for you and are on similar journeys themselves.
Oh, yeah, because people go out of their way to sell you a house at the highest rate that you can possibly maybe afford in your life, right? And that's a topic all of itself, is how people try and sell you these mortgages, or banks or lenders or realtors. They're all pushing for you to like spend as much money on this house as you can. But yeah, your family and your friends are like, oh my gosh, yeah, great, you got a new house, like it's a huge milestone. But that's just the beginning. That's the easy part. People want to give you this money. They want to give you the house, right? Like that's just the beginning of the race. And then, yeah, you still got to get to the finish line. You're doing a marathon here, and starting the marathon, yeah, that's a big step. But you got to get to the end, and the faster you do it, the more you're rewarded, right? And the more you should be praised. But yeah, nobody. I never see people on again on like Facebook or any social network that is like, yeah, I paid off the house, and people freaking out and people raving about how great it is and how everybody's struggling to do the same thing. But you should see more of that, because everybody's in the kind of that same boat there.
Right. Well, and instead you almost see, if you take out more debt, it's celebrated more, right? So if you buy a brand new car, if you bought a brand new Lexus, everyone would be like, oh my God, like that's so awesome and this is wonderful. But if you go and buy a used Honda Civic with 40,000 miles on it, which is actually probably a smarter decision, you don't get that. Like if you posted a picture of a used car that was 6 years old and you were like, I'm so excited about my new car, like you might get a few people commenting on it, but not in the same amount that you would if you posted a picture of a Lexus. So when we live in this consumption driven society, it can be really hard to break away from this. But after I've been on this debt-free journey, and since then, I've really kept my spending levels in check. It's not like, some people were like, oh, what'd you do with all that money once you paid off your student loans? And seriously, I just saved it all. I mean, there was no like, yay, I can go buy my coffee every day because I missed it so much. And I think once people realize that, yeah, okay, now I have this money and now I just save it, they're like, wait, what? Like you're crazy. And so you get to this point where it's like, yeah, that doesn't make me happy. And now I could go buy a coffee every day, but that's not going to add happiness to my life. So why would I do it?
Right, because you're not taking advantage of yourself, right? It's not, you didn't win the lottery, right? Nobody gave you all this money. You just stopped taking advantage of yourself and, basically wasting money on other stuff that you don't even remember a couple years down the road. Like, where did all my money go that year? I don't know, right? Maybe I went out to the bars and stuff. I can't even remember. I don't remember half those activities, right? For one reason or another, you don't remember those activities right, at the bar. But it's important to reward yourself for doing things that are good, but training yourself to not just throw your own money away, and for every dollar that you do spend, that you're making a conscious decision of like, this is adding value to my life for sure, right? Not a maybe, not it's not adding any value, because if you thought about that when you were spending the dollar, hopefully you wouldn't spend the dollar, right? If it was taking away from your life, but really think about things while you're doing them, and think about opportunity cost. That was my favorite lesson from economics in high school, was opportunity cost. And if you look at every decision that you make, and every purchase that you make, and every impulse buy that you're about to make when you're in the checkout line of the grocery store or on Amazon, people love to impulse buy on Amazon, right? Because everything's right there. What is the opportunity cost of that? How much does that cost, and what else could I do with that, like $30, right? Or can I bank this $30 3 times? Can I save on 3 of these decisions and have like almost $100? And then what can I do with that $100, right?
Well, I think we might be getting into a topic for week 2 here.
That sounds, that's a whole can of worms. So I think that's a good idea.
So maybe this is a good place to end our student loan discussion. But if anybody has any questions,
you can go ahead and email me at Angie@moneyinthebankpodcast.com, or visit our website, moneyinthebankpodcast.com, and leave a comment. But either way, we'd really love to hear what your experience is and hear your story.
And other than that, do you have any closing thoughts on student loans?
I think this is a major topic for a lot of people, and I think there's a lot of opportunity for different situations and different income levels. And do you work during college, and should you be focused on your studies more? Should you be paying off the loans? So I think if anybody has any questions, I think that's a good thing to dive into, because we talked about very specific scenarios for what we went through, but we would love to hear what other people have been going through, and what kind of debt that they have when they graduated, and are you doing anything proactively to do anything with that's different than what we talked about, so we can give other tips and things to people.
Absolutely. I would love to hear some success stories, and I would also, if you're kind of struggling and you think, you guys are crazy, you don't know what you're talking about, my situation is completely different, I have no room in my budget, I'm living paycheck to paycheck, drop me an email. I would love to chat with you. I would love, if you're willing to share, some more information, we can talk through it. I would love to really kind of see another scenario that might be very different from my own, but also see if I could help you at all. I think that would be really awesome.
Great. All right. Thanks, everybody. And this is Angela and Brett again from Money in the Bank, signing off.
Money in the bank.